Hello, everybody, and welcome to the latest webinar in the SVV series on AI investing. So previously you would have heard about agents and the AI landscape, but today we're going to be talking about an investment approach to AI, particularly within the enterprise or commercial sectors. And you will have the benefit of myself, Brian Kinane, and my colleague Saurabh, and we'll be diving into these topics throughout the next session. It should last for 45 minutes. In the agenda, we have really 5 sections that we're going to go through today. First is we'll do a context setting, scene setting about the emergence of enterprise AI. Then Saurabh will lead us into the enterprise AI landscape, identifying what type of companies exist within that landscape that are suitable for our investment and the considerations. That will then lead on to Saurabh exploring considerations regarding what makes a good investment versus a poor investment and what to look out for. And then finally, Saurabh will then review our methodology in light of the previous sections about how we approach investing. Finally, I'll come back and I'll discuss some insights and predictions for the future that you can take away from this talk. Next slide. And very quickly, if you wish to have any additional information, I recommend this link to you. It will be a useful source for additional information where we post new white papers and presentations. Now, before we get into SVV and who we are, I would just like to welcome any participants from AI Ventures, especially Mike Luther. We'll be looking forward to having further collaboration with AI Ventures in teaming up both across infrastructure and application AI. Now, a little bit on SVV. SVV is a venture capital firm. It's backed by the British government and the Irish government through their investment agencies, in addition to a number of US and European private investors. It comprises a team led by Barry Downs and myself, who are former operators turned investors, which means that we have built our own software companies and exited them to acquirers. We have a strong technical knowledge of AI across the team, including people like Saurabh and DC and Barry, etc. And we have many computer science and engineering graduates within our team. We've been investing in AI since 2017, where the latest wave of AI kicked off with the Attention white paper. And we actually have exited companies in AI throughout those following 6 years to 8 years. And we have significant experience of building startups. We have lived the journey, both the difficulties and the exciting elements of it. Next slide. Now, I'm going to, having introduced SVV and a little bit of our credentials, I'm now going to explore some context setting, which is the emergence of AI, enterprise AI as an investment category. So next slide, please. And this is essentially our thesis that we're gonna go through today, and you'll see this reflected throughout the presentation. Firstly, over the last 8 years since 2017, there has been a massive supply side push of AI infrastructure spend, creating a global subsidized computing platform providing AI capabilities. This has led to new consumer and enterprise adoption and new capabilities driving productivity, revenue, efficiencies, and that's most illustrated by the adoption of ChatGPT. And you all will know the way you have used it to improve your efficiency. Now, consumers have led this, as I've discussed, but we are seeing now enterprise doing take up, and enterprises are now exploring how AI can affect their businesses and how they can use it to transform revenue generation, efficiency, and cost saving. And this initial experimentation by the enterprises, we're now approaching a phase where those enterprises are exploring it at the CXO level or the C-suite, where they're actually saying, where is the ROI? How do we measure ROI? What does AI do for the business at the top level? And this, of course, creates an opportunity. Like in any technology shift, a new class of companies are emerging that are solving that problem, both leveraging this global compute platform and combining it with deep enterprise integration to generate that return on investment. Next slide, please. Some definitions firstly. So what is enterprise AI? Well, enterprise AI, first of all, is the domain of AI that's built on the AI infrastructure layer. Now, most of you will be quite familiar with the infrastructure layer. That's NVIDIA, Google, Oracle, OpenAI, the major investment in this whole layer of compute and cloud and foundation model capability. The application layer builds on that, uses it to deliver ROI. And what does it comprise? It comprises development tools, tools that enable people to build AI applications, deployment, security, operation, and optimization tools, tools that enable the enterprise to make it work efficiently and effectively within the context of their existing IT architecture. Then cross-process applications. These are common processes across all enterprises, across all industries that could be automated and transformed using AI. And then vertical applications, AI applications that are very specific to that industry in question, such as medicine or finance or transportation. And this has been implemented through a prism of agentic computing, which is a way to break up these AI applications into individual agents that can autonomously provide different elements of business activity, and then they can be combined using agentic middleware to create complete solutions operating in the enterprise, effectively recreating and augmenting the work of human employees. And if you see on the right-hand side, you'll see the stack expressed illustratively in where you see the different tools, the different categories of software that are built on top of that core AI infrastructure layer. Next slide, please. Now, this is not really a new thing. If you look back through the last 50 years, you will actually see the technology trigger at different periods, which was originally mainframe computing, client server computing, PC computing, mobile computing, internet computing, mobile data computing, and so on. And if we look at the blue line, these areas have been often reflected in a major capex push. In fact, if we go all the way back to the start of the 20th century, railways would have been a good example. Electricity would have been a good example. So these waves of infrastructure rollout occur periodically every 20, 30 years. We're currently in another wave of it. So a huge spend goes on, but often the spend occurs before the utilization of that spend is actually correctly figured out, because people don't want to miss out. And again, that's what we're seeing right now. That blue line, where we're about halfway up that blue line, represents a significant spend. And as you can see in the headlines on the right across the press, people are commenting on these massive spends that keep occurring, including most recently the 500 billion announcement for Stargate and NVIDIA's 100 billion investment in OpenAI. So it's continuing to go on at an extremely high level in the hundreds of billions, if not trillions. Now, following that, we see an adoption curve, which is the yellow line, where eventually, as the spend starts to peak, people start to say, okay, we have all this capability, what do we do with it? And then we see the emergence of experimentation, and we're getting about 1/3 of the way up this curve right now. We're seeing experimentation, we see consumer-led experimentation, we see prosumer experimentation, we see it bubbling up within the enterprise. And then that becomes matched top down from the C-suite, where they wish to then say, okay, what does it mean on an ROI level? Then we see experimentation being driven from a strategic imperative, ultimately leading to production systems and to new classes of company providing that capability. Next slide, please. And this is exactly what's happening now. So here we see the performance capability of different foundation computing systems, OpenAI, Anthropic, Google, Gemini. And we're seeing how the performance of these systems are increasing, still increasing at a very fast pace. Now, there are debates about whether this relative speed is decreasing, but nonetheless, it's still very material. So, for example, last year, agent performance would take about 7 months to double. Now it takes 70 days to double. And this is unlocking a whole capability set that has not yet been properly harnessed, but has been experimented with. And now we're seeing, if you look at AI application layer, we're seeing the initial AI tools coming to market, such as Lovable, such as Cursor, and they're experiencing a traction level that's vastly faster than previous waves of such tools in prior technology adoption shifts. Next slide. And these core AI systems are now reaching, on a very narrow level, they're reaching similar capability to a human employee, an average human employee. Now, they are what I would describe as capable, unreliable, to a degree unreliable computing employees, because they're not fully built into the enterprise on a compliance level, an integration level, a deterministic level. But of course, that's where the opportunity is. So it's to take this capability that billions, if not trillions of dollars have been spent on, and to extract ROI from it. Next slide. And that's what enterprises are doing. So as you see here, the shift from Q1 to Q2 of this year, we're seeing enterprises increasing, shifting from exploration to piloting to actual deployment. And we expect this shift to accelerate over the next 5 years. Next slide. But now, as I mentioned earlier, we're entering the realism phase, and it's happened maybe slightly earlier than previous technology shifts, but again, it repeats what's happened many times before. So if we look at the news items on the right side, you will see lots of newspaper headlines about where's ROI coming from, how do we need to justify the spend, what does it mean? But this has happened many times before, and so history is to a degree a guide to the future. If we look at the Gartner hype chart on the left, this is a chart that has been applied to many technology shifts, where you have an initial technology trigger, which was, for example, the emergence of ChatGPT. Then we see the rapid adoption, excitement, enthusiasm. Maybe it's going to create the ultimate AI that will do everything. Then we move into the realism phase where people say, well, maybe it's not that, but it's actually very useful. How do we make use of it? And then we go through a more realistic, sobering assessment. Eventually, the applications and the companies arrive to take advantage of it, make it work for business. And then we move to a new era of productivity where we have a more realistic but effective payoff. And we've seen that with the internet. We've seen that with mobile networks. We've seen that with electricity, rail. It's a very common pattern. And our investment thesis is that that pattern will assert and that we will benefit from that by investing in those companies. Next slide. But of course, the question then is, how do we find, evaluate, and invest in those companies? And I'm going to hand over to Saurabh, who's actually going to explore that question in the next 3 sections.
Thank you so much, Brian. That was very helpful. So what I would love to really cover in the next few minutes is about the enterprise AI market map. What's happening in the enterprise AI environment? What's happening within the organization, within the board level discussion, how they're spending their money, and why they are so bullish to really why and how we can find those companies to solve the ROI and value creation problem, what Brian was talking about earlier. So let's go deeper into that part. So first, let's talk about what is an enterprise AI architecture really looks like. It's composed of like 4 pillars. It starts with the bottom layer, more on the security layer, AI safety and compliance, and these are new types of security companies, not just protecting the cloud infrastructure, but more focused on the data privacy, model privacy, compliance, and governance. Then it comes down to the foundation model and the infrastructure, more around like what kind of model you are using, what model you are using for what purpose. Then on top of it, you need some communication tool for these models and these compliance software to talk to each other. And you need an orchestration and new age of middleware solution. We call that as a control panel, which help companies to communicate, help companies as well as technologies to communicate to each other with the foundation layer and the security layer. Then on top of that, where exactly the ROI value solves all the issues, is more on the application layer, what we call like a workflow native application, AI agentic, and vertical application. And some of the 2 examples which we'll discuss in depth going forward is Vortex IQ, Jade, and Momentum. So these applications are a workflow native solution for specific industry and their specific business processes. So let's go a bit deeper into what's the current environment really looks like within an organization, within any enterprise you take, whether it's like financial services, insurance, healthcare, pharma, transportation, e-commerce. The key theme is there's a big positive momentum over there, and there's a budget allocation in investing in AI. They are investing in infrastructure. The workforce is reshuffled, and also they are retraining their employees to use AI tools effectively and efficiently. And the other theme is they are buying multiple $1 million licenses around using GPT for enhancing the internal work processes. But at the end, they are also doing aggressive experimentation with running pilot project. And what are those pilot projects? These pilot projects are basically how to transform these business processes. And that's where like a CXO debate internally that, okay, I'm doing so much work and there's so much spend over there and we are so excited. How do we get the bigger value of all the spend and expenditure happening around that part? And the answer to that part is only one thing. The real ROI comes from when enterprise embeds AI to their workflows. We'll talk about what exactly is the workflow we are talking about. So, so let's talk about how enterprises can unlock ROI from the AI spend. There are only three simple formula we have seen um, investing in highly competitive companies in AI space before AI became an AI company. One is, of course, a workflow design, how to redesign businesses processes around AI capabilities. Then change management is very important because you are solving a critical like business processes using AI. Your management, your organization needs to adopt those solution and cultivate yourself around like how to use that part. But when these two changes comes, there's a new requirement also comes, the right framework, governance framework, because the common theme is how to ensure that like all the AI outputs are reliable and compliant. And in the previous era, we have seen the compliance process always goes with a standalone a software solution or mostly human in loop. But now going forward, what we are observing is like AI is going to do most of the heavy lifting for an organization across the business processes, and those processes has to be evaluated going forward, and it creates a new bigger opportunity also. So as we have said, the significant ROI comes from when you transform through a through a workflow engine. Two of the good examples I would love to really take over here. And these are the two interesting companies we have invested, who has built a vertical AI solution for their specific market. So Momentum AI is automating the whole customer service and customer support across businesses, and they were able to show a huge amount of ROI for their customer by time saving, cost avoiding, and having a compliance improved. Then like Vortex IQ is a London-based company we have invested, which is automating the whole e-commerce fragmented processes, building AI agents for them who can do the task in a high-paced environment faster and efficiently with more accuracy. But it's not an easy solution to build. It's a very complex workflow they have to build, where they have to consider like a lot of different systems in place. So that's why we are very bullish on the vertical AI side, and that's where like the real ROI comes from. As described, when it comes to ROI and discussion around like okay, the value creation, there's also a discussion around the risk, and those discussion happens within the broader room when these companies, these board members are discussing about transforming their workplace, whether internally by doing a pilot or partnering with another third vendor to do that part. And what are the key four themes they really focus on in the first conversation? What's the trust in those outcomes? How you're ensuring that your AI is responsibly behaving? Data confidence, because at the end, like you're giving your customer data to those models, and those models gonna do the work in terms of application side. Accuracy at scale, as we all know, there's a hallucination issues around AI and model. So how you're solving that accuracy issue, governance and control is like how you're gonna audit those tools also going forward. And these risks creates a bigger new opportunity for all of us as an investment, as well as like building new tools. And that's what we call like enablement layer. uh, these enablement layer helps vertical AI systems get adoption faster, and they fall into orchestration, security frameworks, guardrails, and tooling. uh, just to summarize this argument, so the real value creation concentrates into application and enablement. And the application we define is who solves the last mile problem, more on their vertical market, whether it's like pharmaceutical, life sciences, transportation, whatever the market you choose. And those problems can be solved if you take the right enablement layer alongside with you. So in our thesis, and we strongly believe both of the things has to work together. Application need an enablement layer, and enablement layer solves the core adoption problem for application at scale within enterprises. And this is the perfect timing to really build things and sell those things. So, so till now, I have discussed about the macro environment, what goes inside the enterprise, what they are discussing about, and how what opportunity are there to solve the core business processes problem through AI. Let's deep dive into what works in AI, what's working in enterprise AI, and what's not working internally from the technology side, go-to-market side. And this is our plethora of data we have collected evaluating companies and seen in our portfolio when they scale from early stage to a growth stage side. So, just to rewind the clock back, where exactly AI has gained traction till now in terms of application? There are like six pillars we have identified. Customer success is definitely one of them. Back office automation within finance ops, HR, compliance, productivity tools, documentation drafting, scheduling, reporting. Coding and engineering has the highest uptake in terms of efficiency and using these type of products internally in the organization to build those products at faster rate. Sales and marketing is where like this huge amount of disruption has happened using AI tools, and content creation was the first market which was disrupted when the GPT first model of GPT was launched, because it was more on the blog designing video and asset classes. So, and why they have succeeded, the common question arises why they have succeeded. The thing is that they have created a very simple workflow and they have shown ROI from day one. And but not the least, they are like standalone systems. They don't have to integrate themselves too much with the enterprise workflows. So this is just a tip of the iceberg, and these opportunity creates a new different segment in the market because the model gets better, and it creates a real opportunity in core business process automation using AI agents. Let's deep dive into one of the core important element which every founder asks, every investor asks, and every enterprise customer asks. What happens when a model gets upgraded themselves to a different cycle when they become better? Let's take like GPT as an example, which is the best in class model for most of the work in the market. So in 2022, GPT-3 started, and there's a lot of companies were built. They were building on a thin application on different vertical market. Probably a lot of value created in a very quick amount of time, but they got vanished also because they did not create a defensibility. They just got stuck with GPT-3. And as the model got upgraded, it opens door for enterprise adoption. It built a framework, compliance framework around enterprises side. They started selling to enterprises. So it makes the job easier for someone to create a application layer. Then last few weeks ago, we had a GPT-5 launch. It was a bit underwhelmed, but still it's able to solve a lot of agentic reasoning and automation problem around it. You can use these models to solve most of a great amount of business problems within the organization. So the key theme is coming out of this segment is like each reset creates a bigger market opportunity. So rather than being dependent on a model that like, okay, how it's gonna kill, you need to take a very defensible approach, which we'll talk about later, to create a very well integrated and a compliance software that will like really fits within the enterprise ecosystem and solve a bigger ROI problem for enterprises. So the common question arises, how do we find moats in AI? And the core moat is workflow, compliance, and distribution. There's no another answer we can think of in the last 2 years of investment and with our own portfolio companies. So let me first talk about a wrapper and why some of the companies, the failure rate in AI is also pretty high. So a wrapper definition is a company who takes a model, any large language model, and build a thin UI on top of it and start selling. They get early traction very fast, but they get obsolete as the model gets better because people started finding like, okay, I can do that work within a model also. So we don't invest in wrapper companies, and we encourage to stay away. But it's very difficult to find those companies also, that whether they are a wrapper or a workflow native AI application company. So a wrapper company is basically a thin UI over models, easy to replicate, and they have a very short lifespan. They die very quickly because the model get upgraded to that specific task and it get better. But we concentrate our time and energy and investment into the workflow native AI application, which is built for enterprises, that you are deeply integrated, you are compliance by first design. What I mean by compliance first design is like you have the right trust, regulation, and which creates an acceleration adoption within the enterprises. High switching cost, not easy to switch from your software because you're so deeply integrated with not only the technology, but also with the people who are using your system internally. And durable enterprise adoption, basically like more on the distribution side, how you create faster ROI, strong distribution cycle, and velocity in scaling. Usage metrics becomes very key important. So the common theme is the companies that win aren't just tools, they become mission critical system of actions above mission critical. What we have seen in previous eras is a mission critical system of records. They created records, but now AI is going to solve a last mile problem, which is more on taking actions further. As we discussed about more on the application stack, but you cannot avoid the right governance and security, because these application stack can create competitive advantage using having like right governance and security framework. What I mean by governance is not just from the startup build point of view, but also from the sales point of view. When an enterprise customer really go and try to solve a very specific vertical problem for their enterprises, the first question they ask is like, are you SOC 2 ISO certified? So, and that helps a lot. If you are there, that helps a lot to get into the first door and reduce the procurement time and also reduce the sales cycle. So these things are very, very important in the enterprise AI side. Then like security by design, you have to take the first security by design process from day one. Compliance becomes your differentiator. And the last part is the common question everyone asks is like, okay, you are using AI to solve my last mile problem. Uh, so what's the fairness, transparency, and explainability? How do you explain those things? How you're considering in your systems? These things are very important, and that's what we call ethical AI and bias mitigation. So the core message out of this is the best governance wins, not the best model. Let's talk about the bigger opportunity. Since vertical AI agentic systems drive bigger value, as we have been saying about it, and we firmly believes in, and the history repeats itself. This time, it's going to repeat at a faster rate, at way faster than like any other era we have seen. What Brian discussed earlier. So I've picked up like a couple of sectors like healthcare, financial services, manufacturing, retail, e-commerce. These are trillion-dollar market, and these markets have a highly complex regulated processes within themselves, and they have been most of the processes has been like very human driven and very fragmented. So who's going to solve that problem? I think that the answer to that is very straightforward: an agentic AI application who can work on behalf of them, work 24/7, and solve the last mile problem. So, and why we are so bullish about that part? Because taking a vertical agentic AI approach also creates defensibility, and you leverage the domain expertise. You create a team around that part, and you create a defensible data moat. Also, you train your model around that part. So that ends my argument on what's working, what's not working, and where exactly the bigger opportunity really lies. Let me take you to a journey where we are so bullish, and how we place our eggs in different basket. As a specialist investor, investing in AI for the last since 2017, and we were on those shows earlier also as a founding team. uh, we have figured out what works, what doesn't work, and how we invest across those companies. So as Brian described earlier in the earlier slides, our core thesis lies on the top layer. We don't invest on the bottom layer, but I would love to really discuss uh, some time on the bottom layer. We don't invest in these things because most of the task is solved by a foundation model, and cloud infrastructure, AI acceleration will be solved by very big, large hyperscaler companies. There's huge amount of investment, $1 billion investment already going into that part to scale infrastructure. But when it comes to fine tuning, pattern recognition, expert system, these are core AI engineering problem. People say like, okay, these are different. No, these are like core AI engineering problem, which all these application companies has to solve internally. So when you're building a team, these are the problems you have to solve. How you're going to fine tune your own models. There's no business opportunity there. The business opportunity is when you build a vertical system and you fine tune your models around that vertical specific domain knowledge. So we are very bullish on vertical agentic AI and enablement layer, and that's divided into like 8 segments. AI vertical products, business processes, data security, orchestration and configure deployment, AI agents, dev tooling, and native enabling technologies. And these are a new category. There are multiple billion-dollar companies are being created in these new category creation just on the AI tech stack. So these are some of our investments we have done, which really fits across different pillars. I'll capture like some of the investment. We have not announced some of the deals yet, but I can proudly talk about one of the company we just closed in London, which is solving a very deep domain compliance problem for healthcare, NHS. And it's such a fragmented market. Nobody has touched that part earlier. It's still like very human in loop process. So they are solving that using AI and getting greater traction, which we're gonna announce very soon. Then Vortex IQ is solving last mile e-commerce operation problem, which is again a very fragmented market. So they are very domain specific around e-commerce operation. Momentum, as we said earlier, it's more on the customer success and customer support. Gentek is a very interesting company who is building the centralized orchestration platform for startups and products to communicate to each other with different toolings. Then on data security, new age of AI, new age of application needs a new age of data security. So we have recently invested in a company who solved the encryption, who's solving a data security problem through an encryption way. A very fascinating way of solving that part. Very deep tech product. Then dev tooling, recently invested in a company who is solving an AI debugging problem in real time. So so we place our bets in different pillars. When we evaluate in a company, we look at from these lens all the time. So let me quickly talk about what's our evaluation framework. Rather than calling evaluation framework, this is a continuous evaluation framework we follow, not just when we are onboarding a company or evaluating for investment, but also during the portfolio stage. So some of the common theme we focus are distribution strategy, enterprise sales DNA has to be there. What's the channel partnership approach you are taking? What's your vertical focus and industry specific solutions you are building with compliance modes? What are your data advantage and how you are creating a proprietary data asset as you are getting deeply integrated with that part? Because on a longer term, this will become your biggest strength and advantage. You don't have that advantage from day one, but you have to create that advantage as you scale. Uh, Execution and speed is very important for us because AI companies normally have a different sales process and sales cycle compared to your traditional software. They enter a pilot program or a PSC program first before, and they have to show an ROI as quickly as possible before they get to a fully fledged platform, fully fledged implemented platform within the enterprise tech stack. So we really focus hard on like how do you convert paid to pilot, and what's the velocity you are taking, and these things comes from like the right approach from day one. And the cost structure is also quite different in the AI companies. It's no more of just a cloud infrastructure. There's a additional API and GPU infrastructure. So the gross margins gets fizzy sometime in AI companies. We have seen all the time. So how you're managing your cost infrastructure and the team composition is very important. Is the team really have in-depth knowledge about not selling but also building an enterprise tech stack, defensible tech stack? Compliance is by default is the most important factor, building everything around that part. So let me quickly talk about some of the key questions we ask when we evaluate a company, and this has been built with our own proprietary framework, a 1082 to 56 factor model. We focus on second order strategy question, not just only on the first order. What I mean by second order is because there's so much investment happening, and there's always a fear that like someone else, a big company, will do that part. So we really focus on like what's your moat, durability, what stops big tech replicating you in 6 to 12 months. Have you figured out that part? What's your distribution strategy, how you're going to bundle that part, how quickly you will move from paid to pilot conversion strategy, uh, and what happens when gpt product launches. So we focus on those parts. Just to quickly wrap up on the GTM strategy, not only from the tech side, as we all know, like technology evolves very fast. So like the real depth creates in workflow, depth and trust. And the winning playbook we follow is like you have to start as a wedge and expand it to a platform. uh, just to talk about what's the core architecture really looks like in AI environment, since there's an additional cost built with AI systems apart from the cloud infrastructure. So we really encourage our founding team and the companies we invest in is to take a multi-model approach to really create less dependency on the models, rate spikes, and also like having a lock-in around that part. Just to summarize everything, our winning strategy in enterprise AI is foundation plus vertical expertise plus distribution, and that's how like we divide, we evaluate, we strategize, and we help companies to grow further in their alongside with their journey. Just to summarize everything what we have spoken till now on the strategy side, so SVV primarily focus on the enterprise AI where real value creates, vertical AI solution, compliance and security systems, agentic systems with right distribution strategy. Because we firmly believe all these enterprise AI products are not only capturing the software budgets, but they're also targeting the operational cost around that part. And that's how you're going to create a defensibility. With that part, I end my argument and hand over to Brian to talk about the insights and predictions.
Hi guys, so now we're going to whistle stop through a number of insights and predictions that you can take away and reflect on. And if you'd like more detail in the future, we're happy to have a more detailed session. Next slide, please. So I'm quickly going to do key takeaways, things not to do, and future predictions. Next slide. Next slide. So takeaway one, I think the infrastructure spend has been enormous, but it was non-negotiable. It always has to be that way. But it's not necessarily the case that the infrastructure spenders will get the ROI, but we do believe the application people will get the ROI. Next one. Number two, the application, as we've said, is the ultimate value frontier. We think enormous value will be created at the application enablement layer. Number three. And data is really important. AI data is used to the training of these AI systems, whether it's vision AI or Gen AI. But the defensibility will be built through the time to enterprise, really deep integration, deep compliance, where it actually becomes intrinsic within the enterprise. Next slide. And everything is accelerating. We're seeing increasing acceleration. Major model evolutions are 12 to 18 months. Significant changes in companies occur very quickly. And we're seeing the need for companies to prove the ROI case very quickly to customers. Open source is an important technical consideration. So with AI core technologies, companies can find that what they thought was valuable and private becomes open source and common within a year. So when building an AI application, one must plan for the open sourcing of the edge that you believe you have technologically, and therefore focus on tying into business value much more early. Next one. And outcome pricing takes over from per seat pricing. So traditionally, a software system would charge for its utilization. The human being uses the software system to create the value that creates the outcome. Now with AI fulfilling that role in addition to the human, we expect to see much more pricing based on what the outcome of the software is doing, not its features. So for example, are you saving me money? Are you making me money? Are you increasing customer satisfaction? And it will be priced that way. Next slide. Takeaway 7. AI does have a massive scale advantage over traditional human processes. For example, a human can deep dive a small number of people, but it can't analyze easily thousands of people. AI can do that. So companies will have to think more and more statistically and stochastically in how they approach their business evaluation. Takeaway 8. And then the agent economy needs these key enabling tech opportunities, persistence. So instead of AIs losing concentration or not always being consistent over many years, we'll see more persistence built into the AIs and identity, better protocols so AIs can collaborate with any AI anywhere in the world, and then inbuilt native security. Next. Now a few quick not what to do's. Next. First is, don't mistake technical marvel for market need. AI is a wash for technology push. Often it's in technology in search of a solution. That is a classic error to mistake, where one can be caught in a company where it just keeps needing money to progress the technology, but never achieves a customer. Always seek for product market fit and for evidence of customer adoption. Next one. Number 2, don't underestimate enterprise integration costs. This is really critical because this involves changing human behavior, changing business processes, changing how management look at their systems. So there's a really comprehensive approach to change that is required. And I think what we're seeing right now is a lot of AI companies are building that mindset into how they approach. And that's led to the emergence of the forward deployed engineer who's thinking all the time about how to integrate and deliver value within the business context. Next one. Number 3, don't bet on the jockey when the horse is lame. Again, you can have very successful and talented AI experts, but if the product market fit is not there, then it doesn't make sense. No, next one. And then don't ignore AI's high variable cost. So in previous software eras, the cost would be in the development of the software, but the operational cost was much lower because it wasn't used in a lot of compute power. With AI now, with the foundation models and other systems and the compute required, the actual active operational cost of every request can be very expensive. So modeling that in for scalability is really critical because it could mean that your business is inherently never profitable. Next one. And as Saurabh said earlier, don't build a wrapper and don't fall for a wrapper. Don't fall for a company saying, look what I can do. But then if you deep dive it, you find that actually they're only 10% of the solution and the rest is in the foundation layer. That company won't survive, basically. And then some quick predictions to wrap it up. Prediction 1. As we said, AI native security will be very, very important. And we are investing in a number of AI security companies right now. Number 2, fragmentation of search. And I think you might all appreciate this, is that historically we've had really what we call universal search. One UI, you put in your request, it comes back with a response. But now we're seeing value add search, where you can ask questions, set context, explore, and the AI does the search in the background and then packages it up and presents it to you. So what we expect is we'll see increasingly fragmentation of search with dedicated AIs overlaying search capabilities, and that you won't go to universal search anymore, but you will deal with a very industry-specific AI that integrates search capability. Next prediction. The atom revolution. We also believe that we're seeing now the shift from AI in terms of language. Most of AI has either been in the processing of data or the expression of language. Now we're seeing the shift of AI into the physical world through physical world models, and we call that the atom revolution. So expect to see a lot more work in the area of autonomous computing, manufacturing, and foundation models for robotics. Number 4, doers to directors. So traditionally, human beings have managed other human beings to do tasks. What the AI effectively is doing is bringing in some form of other digital human to do some tasks. So increasingly, I think the human beings will face the choice, is my capability being replaced or is it being augmented? And for human beings really to operate in that environment, they have to evolve from doers to directors, where they become essentially the leader of an augmented team of digital workers. And the human is providing the reinforcement learning, the nuance, the relationship to corporate. And I think this will become a competitive advantage for future employees. Next slide. And then lastly, I thought a little meme you might find useful in thinking about AI. And I saw this recently on the internet and I thought I would share it. So in the traditional world of management, Theory X, we had the boss directing from on high the employees. But then as we've evolved to Theory Y, we see the boss becomes a leader and the leader brings the employees with them. But what happened to all the introverts? It's not really fair on the introverts, but what AI has done is liberating the introverts. So all those introverts that are currently inside companies who feel that the overly social nature of companies has been difficult, they will now finally rise to their true place of prominence by leading a fleet of robotic workers who are totally happy with their introverted personality. So that's all for now. Thank you for attending. We appreciate your interest. If you have any more questions, these two email addresses are a good place to start. And we're more than happy to have a longer session on any of these individual topics because obviously, as you can see, our whole team is very passionate about the subject and we look at a lot of companies every single day. So again, thank you for your time and hopefully we'll talk again soon.